Hi everyone, my name is Busari Abiodun. Welcome to my channel. This is my second video on cash book. In this video, I will be treating double column cash book. Where I will be looking at the meaning of double column cash book, and I will also be taking an illustration on double column cash book and prepare the solution to the question. So let's get started. Double column cash book. So a double column cash book has an additional column for bank. If you remember, under the single column cash book, I said we have a column for recording the amount. So, but for a double column cash book, there will be an additional column for it for recording bank. So, which means the columns will be doubled as cash and bank. So, the cash received, that is when cash is received, it will be recorded under the cash at the debit side, and when check is received, it will be recorded under the bank at the debit side of the cash book. The same thing happens where each time the business make payment in cash, that will be credited under cash in the cash book, and when the business make payment in check, so that will be credited under bank in the cash book. So let's take an illustration on double column cash book. The following information has been extracted from the book of Busford for the month of January 2022. On the 1st of January, started business with 100,000 cash and 50,000 check, which was deposited into the bank. January 3, bought stationery by cash, 2,000. January 7, paid electricity by check, 5,000. January 10, cash sales, 12,000 naira. January 14, withdrew 5,000 naira from bank for office use. On January 18, received check of 10,000 naira from Fiverr. January 20, purchases goods in cash, 10,000 naira. January 23, cash sales, 15,000 naira. January 25, 10,000 naira deposited into the bank account. On January 30, sales by check, 3,000. You are required to prepare the double column cash book for the month of January 2022. So let's prepare the solution to this question. So the name of the company, like I said, Busford, double column cash book. So at the debit side, we write debit. At the credit side, we write credit. Then we prepare the format of our cash book. So you know it's a T format, it's a ledger. So just like I said in the first video, I said anytime we are preparing a cash book, there are 4 major details that must be contained, which are date, particulars, folio, and amount. But in this case, instead of having a column for amount, we will be having 2 columns, which is for cash and bank. So we have the date, particulars, folio, cash, bank. You can see that's 2 columns. So we have the same thing at the credit side as well. So that is, we have date. So like I said, so those are the 2 columns. We have cash and bank. That's what actually made this account to be double column. That is 1 column for cash, 1 column for bank. So we repeat the same thing at the other side. We have date, particulars, folio, cash, and bank. So now let's go to the question. January 1 started business with 100,000 cash and 50,000 check, which was deposited into the bank account. If you remember, just like I said, the money used in starting business is called capital. So with me, on the 1st of January, we put our unit of measurement, naira. If it is dollar, we put dollar. So 1st of January, capital. So the cash is how much? 100,000. So 100,000 under cash, we will debit 100,000 naira. So under the bank, the check is what? 50,000 naira. We will debit 50,000 naira. That is the treatment for that one. So we move on. On January 3, bought stationery by cash. So which means this time around, he is making payment. Cash is going out. That means we are going to credit the cash book with stationery, 2,000 naira. So January 3, that is 0301, stationery. So cash, that means we are going to credit it under the cash, 2,000 naira. January 7, paid electricity by check. This time around, it's a check. That means bank, money is going out. We are going to credit the cash book under the bank account. So January 7, 0701, electricity. So we have cash, we have bank. That means the entries will be under the bank account because the payment was made by check. So 5,000 naira. January 20, cash sales. When they sell goods, they receive cash. That means we are going to debit the cash book with 12,000 naira under cash. So January 10, that is 1001, sales, 12,000 naira. On January 14, we drew 5,000 naira from bank for office use. If we look at this one, they withdrew the money from the bank, but the money was not used to do anything. It was withdrew into the office, which means they will take money from bank. The amount in the bank will reduce. They will now bring it to the office. That means the business is also receiving cash. So that is called contra entry in NACA. Let's look at what contra entry is. This occurs when double entry principle is completed within an account. If you remember the double entry principle, for every debit entry, there must be a corresponding credit entry. That is what we are talking about when we are preparing ledger. That means each time we open a debit entry, if a transaction is having a debit transaction, the corresponding entry will go to the credit side of the other transaction. So in this case, which means the cash the bank is giving money out, we will credit the bank. The cash is receiving money, we will debit the cash. So which means the two completed within the cash book. That is both the debit entry and the corresponding credit entry are completed within the cash book. Let's look at the entry we are talking about. We drew 5,000 naira from bank for office use. So in this case, that means money is withdrew from bank, which means the amount in the bank will reduce. That means we are going to credit the bank account because the bank is giving out. So the money is received into the business, which means cash is received. So which means we are going to debit the cash book. You can see within the same cash book, we have the debit and we have the credit entry, and such entry is called contra entry, and it is represented by C. So let's trade on the 14th of January, that is 1401, we have cash. How much? 5,000. You can see under the bank, we credited bank 5,000 naira. So this same entry will now go to the debit side, 14th of January, bank, because the money is coming from bank. We now debit cash 5,000 naira, which means 14th of January, we have entry in the cash book under cash. That same entry we also have it in the cash book under bank, but one is giving out, the other one is receiving. So we now write C to represent contra entry, and at the other side we put C. So that is telling us that the two entries are contra entry, that is, have completed the double entry principle within the same cash book. So let's move forward. January 18, received check 10,000 from Fiverr. Money is receiving. That means we are going to debit the cash book under bank. So that means 1801 Fiverr 10,000 naira under bank. On the 20th January, purchased goods in cash 10,000 naira. Money is going out this time around. That means we are going to credit the cash book under cash with 10,000 naira. That is 2001 purchases 10,000 naira under the cash book. So on January 23, cash sales 15,000 naira. This time around, we are receiving cash, which means cash books will be debited under the cash account. So 23 of January, 2301 sales 15,000 naira under the cash. So January 25, deposit 10,000 naira cash into the bank, just like the one we discussed earlier. This is also a contra entry. That means the money was just changing position within the organization. It's moving from cash to bank, which means the money will be withdrawn from cash by crediting the cash book, and it will be paid into the bank by debiting the same cash book under the bank. So that's what we are talking about. That is 25th of January, 2501 cash 10,000. You can't see under bank, which means the money enter the bank. So the same entry will still go to the credit side, 25th of January bank 10,000. Under cash, we credited it, which means cash is going out 10,000. Under bank, the bank is receiving the money 10,000, and we put C, just like I said, to indicate the contra entry. C. So that C stands for contra entry. So on the January 30 sales by check 3,000, that means we are receiving money to the bank for sales 3,000. That means the cash book will be debited under bank. So 30th of January sales 3,000 naira. So that is all with the transactions we had. There's no any other transaction. So we go back to our cash book, we close our account, we close the cash column, we close the bank column, we go to the credit side, we close the account as well. So now let's add all the entries under the cash. So we have 100,000, 12,000, 5,000, and 15,000. If we add everything together, it will give us 132,000 naira. So let's look at the bank. We have 50,000, 10,000, 10,000, and 3,000. If we add everything together, it will give us 73,000 naira. Now let's look at the credit side. If we look at it, we can see that the value at the credit side is less than the value we are having at the debit side. So at the credit side, we have, so since the value of the debit side is bigger than the credit side, so we write the same value at the two sides, 132,000 and 73,000. So now let's take a look at the value of the entries under the cash. We have 2,000, 10,000, 10,000. That will be 22,000. Very far less than what you are having under the debit side of the cash, which is 132,000. If we subtract 22,000 from 132,000, that will give us 110,000. So just like I said, under the single column cash book, the 110,000 will be written under the cash, which means by the time we had everything together, the total will be 132,000. The same thing happened under the bank, the 5,000. So plus 5,000, that will give us 10,000. If we subtract 10,000 from 73,000, which we are having under bank, that will be 63,000. So if you look at it, that will make the total to be equal. So the difference is, that is the amount in which the credit side used to be lesser than the debit side. That is what is called balance carried down. I explained that better in my first video. So that balance carried down will now be brought down in the following month as balance brought down, which will be 110,000 for the cash and 63,000 for bank, which means by February, as at 1st of February, the business is having 110,000 naira as cash at hand, and they're having 63,000 naira in bank. So that's what it means. That is all about double column cash book. So thank you very much for watching this video. Don't forget to subscribe to the channel, like the video, and share it with others. In my next video, I will be discussing about the 3-column cash book, a must watch for everybody to really understand what a cash book